In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world.
Trump just announced sweeping new tariffs and the markets did not take it well. Tech stocks are tumbling, investors are panicking and trade partners are furious. But what exactly did he announce? Who's affected? And most importantly, will the markets bounce back? Let's break down what's happening, why it matters, and whether this is just short-term noise or something bigger.
In the last few minutes, US President Donald Trump has announced sweeping tariffs on goods imported into the United States from all countries, including the UK.
Global markets are deep in the red this Thursday. The CAC hunt here in Paris down over 3%, and US markets have been in free fall since the open.
This is CNN Breaking News.
Now we begin with the breaking news from Wall Street. Trading has been underway now for just about 30 minutes, and nervous investors, very nervous investors, are weighing in on President Trump's historic new global tariffs.
Hi everyone, welcome back to my channel. Today we're diving into a really hot topic that's been rattling investors for quite some time, Trump's tariffs. We'll talk about what they are, what they cause the stock market to wobble, and whether there's a light at the end of the tunnel or it's just the train moving really fast. Let's get started. So what exactly are tariffs? Tariffs are essentially taxes placed on imported goods. In the previous Trump era, these were often targeted at countries like China, Mexico, and the European Union on products like steel, aluminum, or other goods. The idea was quite simple: to protect domestic industries from cheap imports, encourage manufacturing jobs at home, and reduce the trade deficit. But this time is different. This time, Trump's approach has led to trade tensions and retaliatory tariffs from other countries. So what exactly was announced? On 2nd April, Trump announced new tariffs. Basically, all imports to the US are taxed by a 10% basic tariff. Goods from countries like the UK are taxed like that. Some other countries didn't have so much luck. There's a 34% tax on Chinese goods, 20% on European products, and 25% on imported cars. Some countries have more like Russia, which didn't get any tariffs at all. A move Trump called reciprocal and part of a plan to rebuild American industry. To add some context, this isn't a one-off tweet, it's a major shift in US trade policy. The stock market reacted immediately. S&P 500 futures fell 4.8%. Nasdaq dropped almost 6%. Dow Jones fell almost 4%. And Apple is down over 9%. You need to know that markets hate uncertainty. Every time a new tariff gets announced, businesses have to rethink supply chains, potentially pass on cost to customers, or halt investment until they know how bad it could get. This is why Asian markets plunged overnight and European indices opened in the red. This isn't just about politics anymore. This directly impacts your investment, pensions, even the price of your next iPhone. Even if the actual economic impact might be moderate, fear and headlines can trigger sell-offs. market sentiment can spiral quickly when people think a trade war is brewing. But who is going to get hit the most? Well, first of all, tech. US tech companies rely heavily on overseas supply chains. Auto industry, there's like 25% tariffs and they could raise car prices by up to $20,000, like yikes. And luxury goods, LVMH and Hermes are already talking about price hikes. Agriculture, farmers are bracing for retaliation, especially from China. China, the EU and other partners have condemned the move and retaliatory tariffs are on the table, and this could escalate really fast. Even tiny trade partners like Norfolk Island are in the crosshairs, suggesting this policy is more about optics than real strategy. This is quickly turning into a geopolitical chess match, and the board includes your wallet. Tariffs often create short-term volatility. Stocks might dip when a new announcement surfaces, then rebounds if negotiations look promising, or if the impact is less severe than feared. Analysts warn the move could fuel inflation, like 4% more is expected if tariffs persist. It may also slow down GDP growth and push the US closer to a technical recession. And the big question, is this just a short-term tantrum, or are we entering a new economic era? Historically, markets do tend to recover from trade spats if they're eventually resolved or partially bought back. However, if tariffs persist or escalate into a full-blown trade war, the damage can linger. What can you personally do with it? Well, there are a few strategies you can follow. So stay diversified. A diversified portfolio can help weather ups and downs. Holding a mix of sectors and geographies can mitigate the impact if tariffs hit one region or industry harder than the other one. And don't panic sell. Follow reliable financial news and official announcement. Reacting to rumors can lead to a panic selling. Wait for clarity before making big moves. Also follow the policy, not just price action. Companies with strong balance sheet and robust supply chain strategies might handle tariffs better than those heavily reliant on a single country for parts of sales. For example, we know that Nvidia is moving their fabrics to USA. So also you need to know that chips are currently not taxed, but we'll see what the future brings. What do you think? Is Trump playing 4D chess or tanking the global economy? Let me know in the comments. Don't forget to like this video and subscribe my channel for more small takes on business, market and money. Thank you for watching and see you in the next video.